Well, despite poor economic data and a stock market sell-off, bonds sell off today as well. Pretty busy day. Most people attribute it to a less than dovish Fed minutes and ECB minutes yesterday and early this morning. Interesting to note that we saw a little bit of a downdrift in futures prices overnight at about 10 o'clock. And then after a plethora of numbers came out, 7:30 a.m. to 8 o'clock Central Time, we saw an additional sell-off. Bond futures opened today yielding 2.645. The high tick, or the low tick in the futures, high tick in yields, 2.698. And the low in yields, high in futures, 2.642. So a 5.5 basis point range, and settling close to the high of the day in yield terms. Now, back to the minutes from yesterday. Most people would agree that the Fed was fairly dovish with regards to balance sheet. However, when it comes to a potential rate hike this year, I think it caught a lot of people off guard, especially as they thought about it more and more, realizing the potential pathway to a rate hike isn't as clear-cut as it was even 48 hours ago. That also to say, bonds have been trapped in a bullish range for quite some time now, and some people just continue to think this is just people squaring off positions. That said, economic data net wasn't that good. I mean, starting with a positive PMI came out today that was actually mixed, bad manufacturing but good service number. Weekly claims actually beat expectations. But the bad news is that a new existing home sales number came out poorly. Durable goods was much worse than expected. And last but not least, the Philly Fed was dramatically lower, notching negative 4.1 with consensus estimate of plus 14. Futures did react initially. However, it seems like the driver is more about the Fed minutes and the ECB. ECB just not being as clear as investors want it to be with the long-term refinancing operation, and also the pathway to the credit channel. Plenty more to come with the futures market. It'll be very fascinating to see with upcoming Fed press conferences and meetings between now and the middle of March. So many traders are hoping that we finally break out of this 20 basis point range that we've been stuck in for the past 2 months.